Hi, it's the Catholic CEO, Henry Kutarna. You're listening to our Catholic Business Wisdom series module on taxation. It's been said that there are two certainties in life, death and taxes. Now, there is some humor in that, but there's also, deadly truth. Taxation has always existed in one form or another. And so today I'm going to make some comments that are relevant to your business. If you, as a Catholic business owner, want to survive in the system, you will pay taxes. And you'll pay taxes at the federal, national level, at the provincial or state level, depending on your country. You will pay it at the city level. You may pay it at a suburban or aggregated township level. And you certainly will pay user fees when you use a public swimming pool or a public playing field or something like that. You will also pay a form of tax when you have a homeowners association or any other aggregated service provider. It's all a form of taxation. And so it's always existed. It's an example of the coercive power of the state, which is a public policy term not intended to be frightening, but I guess the term is, it's the coercive power of the state. Because if you do not pay your taxes, you will be penalized. The state has the full authority to either seize your property or seize assets that you have or do other things to impede your ability to use your own money. In recent times, the freezing of bank accounts occurs as when there's a failure, for example, to pay taxes. Failure to pay certain kinds of taxes, particularly if there's fraud involved, well, that becomes a criminal activity. So the taxation system is a powerful tool that the government uses. Now, if you look back to biblical times, St. Matthew was a publican. He was a tax collector. And in those days, a tax collector was really considered a traitor because to collect taxes for the Roman government, if you were a Jew, an Israelite at the time, was actually an act that was deliberate, and it was seen to be deliberately defying the rules of religion. Kings in recent times, military service concept. If you look at the medieval times when kings and abbots or kings and emperors would use military power, military service requirement as a form of taxation. Sharecropping. You will know in the feudal times that people would be required to give a certain portion of their crops every year to the king or to the emperor as payment for protection or for simply a payment to fund the activities of the government, you could say, at the time, such as military or public services and so on. Now, in our current time, we have taxes on income, we have taxes on our purchases. Some countries have what is called a flat tax. In Canada, it's called the GST, the Goods and Services Tax. In Europe, it's called the VAT tax, VAT, Value Added Tax. And in many other countries, the taxation model is used to tack on a few pennies, a few percentage points, and sometimes high percentage points, all the way up to, let's say, 12 or 15% on top of every purchase. So it's a way for governments to raise money on consumption purchases, and it's regarded in many ways as a fair tax because the more money you have, the more you spend, and therefore the more you can afford the tax. There is a tax on property. As you know, you own a house, you own a business, you're going to pay a property tax, you're going to pay a business assessment, you're going to pay business license fees, and so there's going to be a taxation on what we call an asset, and that's something that is also, it can be an insidious form of tax because the value can be much higher than one expects. There's an affordability question, certainly. When you drive on a freeway and you take the tollway, you're going to pay a tax for the use of that road. If you are involved in services, sometimes you will pay a service charge, and this can be added to a bill or an invoice. Sometimes a service charge that's added, for example, in a restaurant or in an activity that involves personal services, it's really added onto the bill. It's called a service charge, but it's also a form of taxation. In some cases, the tax revenue does not go to the governing authority, it goes to a business. But generally speaking, when we pay taxes in our business, that money goes to a governing authority, whether it's our homeowners association, our business association, our economic zone, our state, our province, our city, our town, our municipality, our rural municipality, our county, or our city, and certainly to our national governments. There's a payroll tax in many locations. You have a payroll, you have a certain number of employees, and for every dollar that you pay to that employee, there's going to be a fraction of a penny or a penny taken in tax. And so payroll tax is also considered by many to be a fair tax, because the larger your company, the more revenue you have, the more your ability to pay the tax. And so my first conclusion for you today is that taxation is, yes, the coercive power of the state. There's a penalty for not paying your taxes. It's so rigorous, and it's applied consistently across the board in almost every nation on earth. And the point is that there is the punitive nature, the coercive power of the state is at work. But the debate about the level of taxation is one thing. So is the debate about whether the taxation model is called progressive or regressive. A regressive tax would be one where the tax drops or declines as the income or the taxable amount increases. A progressive tax system, which is what is used in our income tax systems in North America, is one in which the taxation rate rises as the income rises. Taxation also is modified by deductions, and so certainly you'll notice this from your income tax. You're going to be able to take your income, but deduct from it certain basic expenses or certain legitimate business expenses if you're running a business, and you'll end up with something called net income or taxable income. So there's a lot of detail that I could go over, but we don't have the time for that. Here's the other principle that one really learns at an early age. It is legitimate and legal and ethically correct, even in terms of Catholic teaching, to avoid taxation by all legal means. In other words, loopholes, deductions, and legal ways that you can avoid or minimize taxation is legitimate. But tax evasion, the illegal evasion by cheating, by dishonest, by fraud, that is, of course, illegal. And as we mentioned a moment ago, that can lead to criminal charges. So remember that tax avoidance is legitimate, but evasion is the problem. Taxation is a disincentive to production. So when you are in business and you're going to pay taxes, increasingly you're going to find that is a disincentive to production. And it does lead some people to not only do tax avoidance, but tax evasion. And so this is the disincentive angle can, in fact, hurt a business. It can be a normal cost of business, an acceptable cost of business, if the level of taxation is considered moderate. There is a concept that you're going to hear about in business called Tax Freedom Day. Tax Freedom Day. In the U.S., the Tax Freedom Day is considered around April the 16th currently. I looked this up. And at that point, 29% of all the income that you will have earned is actually gone to pay for taxes. In Canada, a much more highly taxed jurisdiction, Tax Freedom Day is June 14th, where 45% of all your income that you've earned in that time period is gone to pay taxes. So the notion of taxation as an imposition or a cost is there, and consumers can express it in terms of Tax Freedom Day. In other words, after Tax Freedom Day, the income that you earn is going to be then given for your own uses, for all your discretionary uses. Some activities are what we call tax exempt. So there might be an exemption for churches or religious purposes or certain public properties or certain not-for-profit organizations or certain charities where the government of the jurisdiction decides that that income or the assets owned by that type of organization are exempt. So remember to take into account tax exemptions. Even in private business, there may be situations where something that you own or a certain type of income that you produce is actually exempt from taxation. The concept of tithing, it has been said that God only asks 10%, whereas the state today asks much more than 10%. This is a common remark. But the concept of tithing, that is to pay 10% of your income to the public good, to charity, to the church, to the parish, to charitable good works, is an entrenched concept in society. Everybody is aware of this, and many people still do this, and it's a noble pursuit, particularly in an era when business and government didn't really handle all of the charity acts of the public. The citizens handled this using private means rather than the public means that are available today. There's also the concept of low tax jurisdictions and high tax jurisdictions. This is a concept, especially tax incentives are used often to attract businesses. And so what's happened, for example, there was a recent article in the US, the economic center of gravity, the actual economic center using dollar value, I think, of gross domestic product, has shifted in the last couple of years. In pre-pandemic times, it was centered in the Northeast. Today, it has been centered in the Southeast. And so in the United States, as an example, the center of economic gravity has now shifted to the Southeast, and that means that those are generally lower tax jurisdictions. They may even be lower income and wealth jurisdictions, but the point is something has been done through public policy to create tax exemptions, tax inducements, tax attractions, tax benefits, and other programs to get businesses to move and to create new investment in these areas. And so it's an interesting phenomenon. In fact, not only is the economic gravity shifted, but I think the statistics showed that it was 2 or 3 million people have moved in the last 2 years from the Northeast to the Southeast of the United States. So that's an example of the center of gravity shifting by a public policy measure involving only taxation. And of course, there are many other factors at work too, but taxation can be an instrument of public policy. You can, in your business, be aware that you must follow the rules. And so whatever your tax code says, or whatever the law says or the regulations say about what is to be taxed and how it is to be recorded and how you're supposed to pay the tax, what happens if you are late with your tax bill? You may face a penalty, or ultimately if you do not pay or cannot pay your tax, you will be perhaps expropriated, or your property will be seized and you will be penalized for that. And so there's a large kind of industry that has grown up in terms of advice to businesses about how to be wise in avoiding tax but not evading it, and certainly in audit proofing your business. The tax audit is something that is done by government. It's an interior examination of your company's books and your practices. It's a hard thing to incur an audit. It's difficult. It happens to a lot of people, but it's something that we must be aware of and expect. The general wisdom that I would pass on to a business owner today is, if you can, of course, in a rational economic sense, you would locate yourself in the lowest possible tax jurisdiction that you can. If you cannot do that, then your obligation as a business person would be to find legitimate ways to reduce your tax burden, that is to avoid tax using all of the rules and regulations, getting good advice to do so, getting proper advice to do so. If you are a business person, you will also be familiar with the concept of pre-tax earnings. We can run our business, we can make revenues, and we can deduct expenses, and we have something called net profit. That could be called pre-tax profit, because after that you will then further deduct your tax bill and of course debt and some other things. We'll talk more in a future session about this. The concept then of taxation, in summary, is that taxation is a public policy tool used by governments and authorities over us to take a portion of our revenues and our assets to pay for public services and to pay for direct services. And this is done as a public policy. It's using the coercive power of the state. It's difficult to avoid. It's in the sense of you can't avoid being taxed. You can practice tax avoidance and you can practice good tax wisdom and tax planning, but you can't evade taxes. The progressive tax system is much lauded these days. Let us always remember that You need to take into account the taxation, and you need to plan for it. Many businesses get into trouble by not setting aside money every month to pay the tax bill at the end of the year, whether it's a property tax or an income tax or some other form of tax. So that's a quick story on taxation, something to be aware of for your business. It's the Catholic CEO, Henry Kutarna. Thanks for listening. God bless. We'll see you next time.